Welcome back to the Crypto's Key conversation. We're going to quickly jump into CoinGecko here. We're sitting at a $2.18 trillion market cap. It came down from a little bit earlier. We were sitting at a 2.2 earlier. Bitcoin sitting at 43,000. Ethereum's 3,300. Binance Coin sitting at 493. Tether's Tether. Solana's at 147. Cardano 132. XRP sitting at 78 cents. Terra's in the number 9 spot sitting at 86. Polkadot sitting at 28. And so on. The market's looking pretty decent here. Going to the fear and greed index here, we can see we're still sitting in the extreme fear range. As you can see, now, yesterday, last week, last month, we've been in fear. There's been a lot of fear in the market, especially with the whole Fed coming out with the inflation rates, the CPI stuff. Just been a lot of fear in the market in general. I wanted to start this video here with Pomp had tweeted a video of Michael Saylor, and when he's talking about his strategy of micro strategies and the effects of inflation and the potential bubble of Bitcoin and digital assets. So let's dive into this video.
So you mentioned your vision and why you're so bullish on Bitcoin. We just heard from Sam Bankman-Fried, who is welcoming regulation starting, hopefully, he says, out of the U.S. this year. Is that your feeling, or do you worry that regulators could ultimately regulate it out of existence? China, for instance, banning Bitcoin mining.
No, I think actually regulation and clarity is going to be great for Bitcoin. Bitcoin is universally acknowledged as digital property. It's common property. All the question marks are around currencies and securities and platforms and exchanges. One thing that's clear is everybody on Earth wants to own property. And if you live in Africa or South America or Asia, what property would you rather own than Bitcoin? So, the regulatory clarity is going to accelerate institutional adoption of Bitcoin, and you're going to see large flows of capital into the asset class as this continues.
But here's the difference with Bitcoin and property, Michael. Property, you can value it. You can see the location and the neighbors and what it's worth. How do you know, how can one determine what Bitcoin is worth? There's no balance sheet, and it really hasn't been a long-term proven asset.
If you lived in Zimbabwe, what piece of property would you rather own than Bitcoin? If you lived in Argentina and there's an 80% inflation rate, what piece of property would you rather own than Bitcoin?
Well, maybe the U.S. dollar.
Actually not. The U.S. dollar is losing 20% of its value a year, and Bitcoin's going up in value every year. So the real important thing to note about Bitcoin is that Bitcoin is a global monetary asset, which means everybody on Earth is going to have a need for that property. And it's a scarce, desirable asset. Currencies are designed to lose value. And, the dollar is the strongest currency. But if you look at the lira, or take the Argentine peso, the blue dollar rate hit 209 today. It was 15 about 4 years ago. So you can't save your money in a currency. You have to actually invest in a property. And for 3/4 of the world, they can't buy the S&P index. So it's not an academic question of whether or not you buy stocks or you buy Bitcoin. You can't buy, stocks when you live in the middle of Africa or Egypt or Turkey or Lebanon. So really, you need property.
I get it. I get what you're saying about the developing world. Finally, and very quickly, Michael, what do you tell people out there who are now, and this chorus is growing a little bit louder, saying Bitcoin's a bubble, the liquidity from the Fed, that big tide is coming in, and it is proving to be just a speculative investment, and it's popping?
Yeah, people are skeptical of Amazon and Google and Facebook, but the next digital transformation is the digital transformation of property, money, and energy. And Bitcoin represents that transformation. So 8 billion people are going to want to move money at the speed of light on a mobile phone. What I would tell them is Bitcoin is the asset. Bitcoin is the network to move money at the speed of light. There is no other open, permissionless protocol to do it. So technology is on our side. This is the future of the internet.
So that was him touching on all those different topics, especially when it comes to, the inflation, Bitcoin being digital property. Obviously, we see it as, it's the mothership of crypto, and we see it as a store of value. There's a lot of other, projects out there that have great utility when it comes to, cross-border remittances and transferring money from peer-to-peer, business to business, that do it in a faster and more efficient way, compared to Bitcoin and proof of work. So I do agree with them in regards of, yeah, people may see it as a bubble, and yeah, technically it is. We have these so-called 4-year market cycles, and eventually the bubble does pop, and we go into, a said long bear market. But the point is it still comes back. And there was actually a couple interviews with Kevin O'Leary and some other big investor and analyst that we're talking about, like, if you want to be a part of these changing industries, and when it comes to technology and future things, you got to kind of ride those waves. Amazon wasn't always up, or Google wasn't always up. There was the ebbs and flows of the market. At one point they're down 40%, and then they're up high, then they're down 90%. I think Amazon was one of the ones that they were talking about, but it's very similar here. And Kevin O'Leary, in a recent article that we had posted, was specifically talking about the comparisons between Google, Amazon, and Bitcoin in the crypto space. So I mean, it's there's no secret that this is the future. Bitcoin and cryptocurrencies are the future, and this is where we're heading. So now with the talks of inflation coming up, the U.S. inflation hit 7% in December, fastest pace since 1982. So back then, I think it would surpassed 14%. I think it was 14.2%. So we're still early in 2022. So who knows where we're going to go in the inflation aspect of things, depending on what Jerome Powell and the Fed come out with their policies. And they said that they're going to start increasing interest rates. So who knows how that's going to affect what we look like. But in the grand scheme of things, our purchasing power of the dollar is going down. And this is a visual that's talking about $1 is currently worth 2,300 sats. So if you look at the comparison here, 10 years ago, you would get almost 15 million sats for $1. Just according to a year ago, it says 2,700 sats. So it just shows you the purchasing power of a dollar is literally dwindling. It's becoming almost irrelevant. So coming over here, this is RJ. I forgot how to say his name. Niederhofer. Pretty much what it is a flagship fund that beat the last two major stock market crashes, growing more than 100% during the tech bubble crash of 2001, and gained 51% in 2008. So obviously this gentleman right here has done very well when it comes to pretty much the bad side of the market and the ups of the market. So here goes his kind of opinion and conversation on kind of what we're looking like when it comes to inflation in our markets.
All right, Roy, we have inflation at a 4-decade high, worst since 1982. Fed Chair Powell saying that the Fed is going to tighten, ending asset purchases in March, raising rates over the course of the year. Now, Powell's admitted that he was wrong on transitory inflation. It's clearly not. But do you think that the Fed can effectively rein in inflation now? How persistent do you see the inflation problem?
My view for a long time has been that the money printing that has occurred all the way since the global financial crisis in 2008 is really coming to a head now. So while we may have a trigger with COVID and some of the supply chain issues, this is something completely structural that we're experiencing. My view is that this is not going away, and moving rates from 0 at a 0.25 to 0.5 up to 2% is not going to make a significant difference when you have real interest rates of -7%.
So Keiko does a great job. There's another interview here that this is Professor Steve Hanke. He's an economist, and pretty much giving his take on kind of what his market sentiment's like and what he feels about or what he thinks about the inflation rates and how it's going to affect us moving forward.
Fed has indicated 3 rate hikes this year. Some speculate potentially even more may happen in 2022, and they've already started their asset purchase tapering program. So do you think that 2022 will be the year of lower money supply and hence finally lower inflation?
Well, number one, the Fed's doing a lot of talking, but they're not doing any tightening. The money supply measured by M2 is still growing at over 12% on a year-over-year basis. And to actually hit their inflation target at 2% per year, they would have to bring that growth rate down to about 5 to 6%. That's about half of what it actually is right now. So you must keep your eye. It is all about the money supply. It is not yakking about interest rate increases and things like that. You only look at the money supply. And the money supply right now is growing about double the rate that would be consistent with a 2% inflation target.
So are you saying then that even if they do raise interest rates, I'm not saying they will, but suppose they do raise by 75 basis points, even 1%, that in itself may not be enough to reduce the money supply. It won't bring, in other words, a higher interest rate, a higher Fed funds rate may not necessarily bring down the M2 money supply.
That's correct.
Okay.
And the problem with what we're facing now is that the excess that they've already produced, that's there now, we know it's there, and they're still producing an excess, by the way, this 12% versus a golden growth rate of around 6%. They're still pumping things up. That's going to be with us for a while. This is going to be persistent because remember, the lag between money injection and inflation, 12 to 24 months, as you indicated, that's correct. So even now they're producing money at too fast a rate, and that will be with us, right what they're doing today will be with us for another year or two. Just what they're doing today, let alone the massive excess that's already been accumulated due to the post-COVID surge in the money supply.
So that was Professor Hankey's take on what's going on with inflation in the markets. And it's kind of scary. It's like, okay, so what is the plan? What's going to help us, surpass this and come out of this and be prosperous from this? What is the best hedge at this point? If the purchasing power of the US dollar is dwindling, day by day, year by year, and, we're constantly printing money, the supply is massive, and you're trying to implement these so-called interest rate spikes that eventually is going to pretty much destroy the market, per these analysts that I've been following. Like, where are we headed? What's going on? So with all that being said, having Bitcoin and digital assets as a hedge, which it's no secret, it's been seen that this is a hedge in comparison to other assets in regards of inflation and what's been happening in our markets. So with that being said, I want to tie into a lot of the stuff that we've been seeing over the years when it comes to so much FUD, the fear, uncertainty, and doubt that's been created by these bigger industry players. Whether that be institutions or famous people or big investors or whatever the case is. So one of them, and I don't care about the timing of the article or none of that stuff. I'm just trying to bring up, I remember when JP Morgan and then were coming out saying, Bitcoin is worthless. And then you have, UBS, and UBS explains why you don't need crypto in your portfolio. And the crazy thing is, it's like they later on come and they pretty much partner. JP Morgan and UBS plan to onboard active cryptocurrency strategies. It hasn't just been these two organizations. There's been many organizations that's come out over the past few years that's been creating FUD in this negative narrative around Bitcoin and cryptocurrencies. But now that we are where we are and we're more educated and more aware of what's going on, it's like we know that all of it was created. First of all, if it was either just their ignorance, just not understanding the space, or it was the other side of it where they're trying to create that to where we as the little people aren't investing and aren't taking the steps forward to grow in this space, to where they're accumulating on the under, almost trying to bypass us. So then, perfect example, JP Morgan and UBS plan to onboard active cryptocurrency strategy. So it says the development is not unexpected. In May, Wells Fargo announced that its investment unit would introduce an active strategy for its deep-pocketed cryptocurrency clients. So this is just a perfect example of what's going on. It's like, okay, you're telling, the majority, the little investors, the retail investors, like, hey, you don't need this and this is worthless, yada, yada, yada. But on the under, you're accumulating, you're pocketing yourself, you're setting your company up. And then, you offer it now that you have it, you offer it to your wealthy clients. Okay, but what about everybody else? So the reason why I'm bringing this up is because with all the fear, uncertainty, and doubt that's in the market, you got to have conviction. If you're in this space, first of all, you only want to invest, and this is not financial advice, you only want to invest what you're willing to lose, okay? So have high conviction and know that Bitcoin adoption, cryptocurrency adoption has skyrocketed over the past, and since the inception of Bitcoin for the most part, but it's been skyrocketing over the past 4 years, since 2017, 2018. So it's like, it's quite evident that, with NFTs, metaverse, DeFi, L1s, L2s, all these different aspects of the crypto space, it's happening. It's changing lives as we speak. So you got to have high conviction knowing that you are in the right place. Do not let go of your Bitcoin and your cryptocurrency and your digital assets so the big players can take it and accumulate. Hold strong. I mean, that's what I'm going to do. It's not financial advice. I'm holding strong. But I'm bringing that up because there's so much going on. Bitcoin adoption keeps growing during altcoin season. So this was back in May of 2021, but this is just a perfect example. I mean, look at the growth. I mean, could you imagine having I didn't pull it up, but a chart from '09 or whatever the chart, the earliest chart that we can potentially have till now. I mean, the growth is massive. I mean, just look at the price in itself. I remember back in 2018 when we were, actually 2017, when we were in the, couple thousands, and it shot up to 20,000. And then now look where we're at, look where we've been. And then you got guys like Kevin O'Leary, who had high reservations against, Bitcoin in the crypto market. And now, he's comparing them to Google, Microsoft, and Amazon, just like we talked about, and has, 10.7% of the portfolio, allocated to, cryptocurrency. And then you have, Mark Cuban, 80% of his new investments are in crypto, and he's big into DeFi, NFTs, and, decentralized autonomous organizations, the DAOs. And then you have, Brazilian mayor to reportedly invest 1% of city reserves in Bitcoin. And then you have Tonga to copy El Salvador's bill making Bitcoin legal tender, copying El Salvador. And then you have, Miami. And then there's just so much adoption going on that it just shows you we are heading the right direction. We are on the right side of history. So truly, for me and my family, I have high conviction on this space. I have high conviction. I hold Bitcoin. I hold a whole bunch of different digital assets and cryptocurrencies that I have value in, just based off of their utility and use case and their ability to change lives and solve a real world problem. So with all that, I wanted to touch on this. The Bitcoin Magazine had tweeted this, and this is from Anthony Scaramucci from Skybridge Capital. It says, Bitcoin investor Anthony Scaramucci on CNBC. When we reach 1 billion wallets, we'll see 500,000 per coin. So whatever the case is, I don't care what time frame it is. We just know that over time, it's just going to go up. Bitcoin's going to go up. The crypto market's going to go up. Okay, the cryptocurrencies that actually have real utility, real use case, and really are solving a real world problem are going to have staying power, and they're going to go up in value. It's going to make a huge impact. So I don't care about what particular target. I just thought this was cool to see. 100 billion wallets, we'll see at 500,000. And then you have, ARK Invest Kathy Wood on Blockworks tweeted here. It says crypto assets will be worth 40 trillion by 2030. Look where we're at. We're sitting at a 2.18 trillion. And Kathy Wood and, her team are predicting that we're going to be at a 40 trillion by 2030. That is 8 years away. Less than 8 years now. I mean, that's not anything. That's almost a 20x from where we're at. All in all, I'm just trying to paint a picture here with all the the fear in the market, inflation, the Fed coming out with all these different tactics of trying to combat inflation, and we're constantly printing, and there's just so much going on. Me personally, like I told you, I'm gonna have high conviction in this asset and in this space, and continue to accumulate what I can, invest what I'm willing to lose, and truly believe that I'm invested in the right projects that are going to have staying power, that are going to make a difference, and that are going to be here in the future. That's what it's about. I'm trying to set my family up for success when it comes to financial freedom, okay? We're so small. We're so early. We're early to the party. You got to believe it. All right, with all that being said, stay strong.